Now we've got a global debt problem that is going on today. In this article here out of the Washington Post, they're talking about the $247 trillion of global debt. It's massive. There's no way that this can ever be paid back. A lot of people who are heavily invested in the markets do make the excuse that either we owe it to ourselves, the Federal Reserve will print it and bail us out, or somehow it will be written off. Okay? Debt is the system of control of the central bankers. They created the system intentionally in order to cause booms and busts. They did that on purpose, and they do it today. They cause a crash, and many people would think, why would they cause a crash? That doesn't make sense. They own the companies. That would hurt guys like Jamie Dimon. He's a friend of them. Why would they do this? Well, you cause the crisis, and then you pose the solution. Oh, I have an idea. We, the central bankers, will print a lot of money and then we'll buy those assets. How does that sound? Or we'll have our friend Warren Buffett buy that company for cheaper than it's ever been in years, and at a deal on top of that discounted deal where you could never get. How does that sound? Oh, sure. As long as you save the markets, as long as you save my job, do whatever you need to. And it happens over and over and over again. And they are so good at doing this, and people don't even recognize the pattern. We have Deutsche Bank right here going below that point, below €9. And then it has come up ever since. And why? Because they promise that earnings are better than before. Don't worry, earnings. This is what a joke. This is what a joke this whole market is. Deutsche Bank's earnings are going to be good, so we can watch the stock rise now. Who the hell cares about earnings? Who cares? It doesn't even make any sense anymore. Those are done. Those days are done. The central banks have disrupted all of that which made sense before. These are nothing but people making money in the short term. They knew this was going to happen. They bet on the news. They watch it rise, and then they're going to sell it off. Nobody wants to hold this disastrous stock in the moment right now unless they somehow believe that in the longer term they're going to be able to turn it around. This is the price of an ounce of gold in Turkish lira going way back, but I just want to focus on, let's say, in the last couple years. We have seen the price rising. Now the price of gold has not risen in US dollar terms. It's been trading around this range for years. But look at this. So I believe this is the beginning of 2015. Okay? Just since that moment, look at the price rising from approximately 3,000 to 6,000, doubling in just a few years. Now, is that gold being worth more? Gold is gold. It's a lump of metal. But the currency is devalued, making that gold seem more valuable. It's all in relation to something else. People aren't getting that our currency, if you're in Australia, your dollar's being devalued. If you are in Russia, your currency is being devalued. If you're in Argentina, trust me right now, your currency is being devalued. Brazil, Venezuela, don't even get me started. Canada, US, look around. Pick a place, and everywhere where you see a central bank, the currency is being devalued. And it's being done intentionally. Let's just get over it. And the purpose, the reason I tell you this is that you should be holding on to real assets. Because assets will at least be able to keep up with inflation. You don't see it over time. Like, for example, if I bought in right here, throughout these few years, I'm going to feel like a fool. I'm going to feel like a fool. Look, oh, the price is going down. I shouldn't have bought that gold. I shouldn't have done that. What a mistake. And then suddenly things change. I'm not suggesting you should buy gold or anything else, okay? That's not my issue. What I'm telling you is that real assets provide us with this level of protection, especially when we are diversifying. And then there's this. I couldn't believe I read this, but I mean, I've been seeing articles. I didn't touch on it, but I can't avoid it. There's so many articles about it. It's ridiculous. The new San Francisco mayor is talking about the waste being left on the streets. It's so bad. It's everywhere. Children are seeing it. Parents are seeing it. And this is at a time when San Francisco's real estate prices are at the highest they've ever been. Rent is at the highest it's ever been. $3,500 a month for rent on average. The average home is selling for 1.6 million US dollars in San Francisco. Look around. You see this extreme high and this extreme low. Where is the money going? It's being funneled away from the middle class, which is essentially becoming non-existent. Over time, it's going to happen. It's already happening, and you're seeing more and more poverty. Nobody wants to hear it, but hey, you're going to get the truth whether you like it or not. You came here for the truth, so let me unveil that for you. That's the line. I tried to get rid of the line so many times, but so many people wanted to hear it, so it stuck. All right, if you found the video informative, please give me a thumbs up. Last but not least, if you want the financial education you were not taught in schools, these two books have it all. You can get from A to Z, top to bottom, in these two books. They fit into each other like puzzle pieces, covering information all the way from the foundation and the history, teaching people who may not know anything about finance. You can read these books, both of them. They're really, really good at making it so simple to understand. That is the skill that I have, which is essentially to be able to take extremely complicated subjects and just simplify them. Get rid of all that fluff. That's what I do in these two books. So check them out at Amazon. There's a link in the description. And if you're more interested in the audiobook version, you can get that at themoneygps.com.